We are joined today by Erick Bronner of the Riverside Company and Ken O'Keefe of Vestar Capital Partners. Gentlemen, welcome to Privcap today. Thanks for being here.
Thank you, David.
We're talking all about co-investing. Both of you oversee investor relations for your respective firms. And so I'm very interested to get your perspective on what the co-investment phenomenon is like and how your firms are managing the increasing demand of LPs to be investors alongside your GPs directly in deals. So maybe starting with a question for Erick. Erick, can you talk about evidence that you've seen that this is a real trend, that LPs are indeed much more interested in co-investing alongside Riverside than perhaps they used to be?
Sure. And I've been head of fundraising at Riverside for a little over 2 years. But when I first joined, and in our history, we had pretty much had a little bit of co-invest interest, but not a lot. I would say over the last 18 months, a number of investors who heretofore hadn't co-invested all of a sudden put programs together. Either it was they had now outsourced it to a third-party provider, or they had hired a team to work in-house. And so certainly our co-invest activity has increased significantly, and we've adjusted to that. But I would say a large percentage now of our LPs are interested in it in ways they weren't a couple of years ago.
How about you, Ken? You've been doing this for a while, and yet can you talk about evidence that co-investing is at a different level than it has been previously?
Yeah, I would say, first of all, I agree with everything Erick just said, but I would say if you look at our experience, for example, over our prior two more mature funds, Vestar 4, which is a 2000 vintage, finished investing in 2006, and Vestar 5, which was a 2006 vintage, we finished in 2011. Statistically, we probably had approximately 25% of Vestar 4 had co-invest participation, and well over 50% in Vestar 5. So I would agree that the activity has certainly picked up. Vestar 6, which is a relatively new fund, 3 investments, 2 of those investments have co-invest participation. So I would agree that the activity has certainly picked up.
I'd add to it that the phenomena of co-invest interest is global. You know, we have funds in 4 continents, and we are seeing co-invest interest among all the funds. And I think it's also the type of thing where these investors are also seeking to make sure that we understand that they're up and running for co-invest. They're coming to our offices, they're making us aware of their capability, and we're taking that into account as we look at deals and put in place processes to manage that.
And are they going as far as to frequently call either both of you, the heads of IR, or even your deal partners, just to remind them that they do have an appetite to co-invest?
Yeah, I would say the latter. I would say that it would not be unusual for LPs to have touch points with at least 4 or 5 other partners, senior partners in our firm, and they have no problem picking up the phone to call them.
Same here. I mean, we've organized ourselves to try, we have a 7-person IR team to manage the co-invest process, but we are getting increasing numbers of LPs, again, indicating to us their ability to co-invest. And a number of our LPs have just started programs, so some of it is introducing ourselves to their program, whether it's a third party doing it on their behalf or whether it's a team that they've hired in-house. And so that's been an activity level that we hadn't seen before.
I'm interested in how both of your firms are structuring the co-investment, processing. As heads of IR, how do you interact with the person who leads the deal in question, as well as the team on the LP, to kind of coordinate the dollars coming into the deal?
I would say it's important for both parts of the puzzle that as an IR person, at least the way we do it, that you have a single point of contact that takes the information in and then identifies which person on the deal team is the right person. We generally have the investor come to us and we'll put together, or the deal team will put together some kind of teaser that then we'll send to the LP. And if there's an interest level, we'll put a call in place with the deal team and let them run with it from there.
Yeah, I would say our strategy is more of an integrated strategy. I would tell you that our organization is relatively flat, and our LP base has exposure to many of the partners at the firm. New York being our area of focus, we have a couple of other small offices. So really, as we invest in an opportunity and determine that co-invest is appropriate, we will reach out proactively. It'll probably come from me directly to an LP. And at that point in time, we will introduce them to the deal team. And the deal team will monitor the process. We'll basically take these people through the process. And we find that to be pretty effective.
You know, let me just add to that. I will say one thing that's changed at Riverside over the last year and a half to 2 years is this sense of, gee, here's an investment that we're looking at. This looks like the type of deal that would lend itself to co-investment, and let's proactively go out and offer it up. I would say we've been in the market raising a bunch of funds, and it's been clear to us from our investor bases that providing co-invest is important, so that's now part of our thinking as we look at investment opportunities to begin to offer it up to them.
You both send out, information when a co-investment opportunity becomes available. What goes into that initial, I guess, share or teaser? How much information is required for an LP to decide whether or not to take the next step?
First of all, realize any time that we have an interaction with an LP, we think that's an opportunity for us. And if in fact we raise funds, every 3 to 4 years, 5 years, and so we view the co-investment process as a really unique opportunity to really give an LP, potentially an important LP, an opportunity to really look inside of what Vestar does, interact with the deal partners, interact with the deal team, and see how we go through that process. So we really believe it's any interaction with an LP is an important interaction. So when we send out, to answer your question specifically, when we send out co-invest opportunities, we'll normally put together a relatively detailed deck, 10, maybe 15 pages with exhibits, which would essentially give them a high-level overview, executive summary. The deal is pretty much baked at that point in time. There really isn't going to be a lot of changes. 99% of the time, we've probably already committed the equity, and we've concluded, for whatever the reason, that this is an appropriate co-invest opportunity.
And I'd add to that, I think it's important, and Ken touched on it, that you are very transparent and thoughtful with our investors when it comes to co-investment opportunities. And I think on our side, most of our co-investments tend to be as we're closing the deal versus having closed it and syndicating it out. And we try to provide them with a thoughtful deck of a couple of pages that gives them a sense of, is this interesting? Is this enough to make a decision on, do I want to learn more? And then get them engaged with our deal team where they can probe verbally to get a sense for the deal in a way that's more substantive than just what's on paper, and then give them access to what we have access to in terms of the modeling and the other diligence that enables them to make a thoughtful answer in terms of whether they want to move forward. And then we move forward in partnership.
When you think about it, what the most important things that I hear LPs say is integrity, transparency of the team, so, so important. But realize that these investors that are coming to us and requesting a co-invest opportunity, they're doubling down with us in a lot of cases. They have an LP commitment, right, but they're also substantially increasing their exposure to us. And I think that really is a validation that the partnership is an important one to them. And I think it's important to us to treat them with respect, and the ultimate in terms of transparency.
And the last point I would make is we're then also asking these investors to make a decision in a finite period of time, right? And so in order for them to do that, they need to have as much information as possible and access to the kinds of people who can answer their questions as quickly as possible, so that in the time frame that we give them, they can give us an answer.
Are LPs ever contacted before, let's say, the auction or the sale process is completed, and isn't there a lot of uncertainty at that stage, and does it make it more complicated to interact with the LPs?
For us, we have at times contacted the LPs throughout the process, either because you want more capital to complete a deal. At Riverside, we focus on the lower end of the middle market, so they're smaller businesses, and occasionally, given that dynamic, you want to top up the equity. So you're bringing people in earlier. I think ultimately, though, when you're dealing with folks who are used to looking at direct investment opportunities, and you're giving them the access to the same information that we have, and you're giving them some time to make the decision, they get to the same place. So we've been able to initiate a number of co-investments with that fact pattern over the last year to year and a half very successfully.
And these are people who are comfortable with the uncertainty that goes into getting involved in a deal that may not ultimately go to Riverside.
Certainly. Fortunately for us, the deals that we've been able to do with these investors have actually consummated and closed, but certainly there is a risk that you'll do some analysis, come to a conclusion, find the opportunity attractive and we unfortunately not win a process or decide to walk away due to diligence, that's always a risk. Or even if you have a syndicated deal, they may decide not to do it for some reason.
Let's talk about the other parties in a deal process. You have the intermediary often, you've got the lenders. Is there anything that's important to understand about the way that they see co-investing, or really the LP partners that might come in with their capital just another source of equity from a potential buyer and they don't really pay a lot of attention to it?
I'm assuming you're speaking about sellers or bankers, or
The seller.
Yeah, the sellers and their representatives and maybe all the other parties that might be part of the M&A transaction.
Well, the bankers just want to know that you have the capital to be able to close the deal. I mean, that's really the most important thing for them. And I think there's really two ways you go at that. You can either speak for the entire equity check, or if in fact the equity is outsized for what you're prepared to commit, you're going to have to bring in a partner. And that partner is going to have to share their views and their abilities, their capabilities. But I believe that co-investing generally, at least the way that we approach it, we are prepared to underwrite the check in 90% of the deals. And I think the banker in those situations really is not that concerned.
We have a 26-year investment history. So for bankers, and many of which we've worked with over the years, the sense of certainty to close exists. But where we're doing deals where you have to top up the equity, there is a sense for the seller of who is the other people involved. And again, that goes to the transparency on both ends of the trade. Walking a seller through, look, we're going to have another relationship, this is who it is, this person may be involved in some of the diligence, these are the things we need to do with them. And I found if you're transparent with the seller, just as you are with the co-investor or investors, all parties begin to agree with why you're doing it. You know, an investor is committing to us for a reason, and we're committing to them for a reason. And when we bring our partners in and we're open and upfront with it, so thus far the sellers have been very comfortable.
I think Eric makes an excellent point. I think in the end, the seller, the banker is really looking to the credibility of the institution, the experience, the wherewithal, and their ability to bring the capital to the table.
Has there been a ramped up, I guess, education process or, I guess, internal cultural buy-in that this is the new reality, that when you're doing a deal, you're also going to be sharing information with a set of potential LP co-investors?
You know, again, for us, we went from a scenario where we had done co-invest for a long time, but it hadn't been at the magnitude that it is today. And I think there was a buy-in on three levels. Level number one was now that when we look for deals, we make sure that we think about, is there a co-investment element we can offer up to investors because we know we want them? If we have a co-invest deal, my team now runs point on identifying the co-invest and making sure that the investors who are interested are put in contact with the deal team that's managing it. And then the third thing is making sure the process is transparent throughout the process so that people feel like they're getting the information they need. And we certainly have not ramped up in terms of personnel, but in terms of putting ourselves in a position to manage that situation. We've certainly have done some work there.
It's important for us moving forward as we continue to develop relationships with our limited partners that co-invest activity will be a key element of how we execute and provide them with services. So with that, our deal teams are all of the opinion that in over 50% of the deals that they will have other financial sources that they will be prepared to deal with. And by the way, that's just not at the outset of the deal, that is going forward also. Because even though our co-investors generally are not active, for example, at the board level or with the management teams, the expectations are that we will provide them with at least quarterly updates in terms of how the company is performing, good or bad, and as to whether or not what the challenges are going to be and whether or not the outcomes are changing. So that would be critical in terms of ongoing communication. So the demands of time are considerable now.
What I will also say, though, is that our LP base, in seeking more co-investment, have gotten more efficient on their side of the table, too. So that when we have a process and we're looking to come to a conclusion, a good number of our LPs are able to either form a decision that they want to do it or form a decision that they don't. And we've been able to successfully bring pretty much all of our deals to a close. So I will say the LP community has gotten very sophisticated and thoughtful with their ability to process information and form conclusions.
I think that's a good point, Eric, and I also believe that it's an LP's response to become more efficient. One of the things that you'll continue to hear from them is that we can respond quickly. We understand your strategic, your strategy here. We recognize the kind of transactions that you're pursuing. We're in alignment with that. We can do the work. We have the people. And so all of that in a very cooperative approach has been very, very beneficial.